there. But as promised, of course, one company that came out with their numbers post-market hours on Friday, that was a Blue Star Capital Goods company. There, the sales were marginally down about 4% The company clocked in losses of about 32 odd crores vis-a-vis profits last time around of about 22 crores. But more importantly, we had the company turning in a loss at the operational level. But to get you a sense of what really drove the numbers this time around, Satish Jamdar, Managing Director at Blue Star, joins us now on the line. Mr. Jamdar, morning. Lovely to have you with us, and thanks very much for joining us first on ET Now. You know, as expected, the numbers did come in along the expected lines. It was a tough quarter sequentially as well as on a year-on-year basis. If you could outline for us the key factors that drove the results, and do you think the worst probably is over for the company?
Yes, good morning, Megha. I did mention in the last interview I had at the end of quarter two. In fact, we posted losses in quarter two. I mentioned that we have a few more quarters of challenges ahead, and I think the same thing is panning out. So it's not a surprise, but indeed is not something which we wish to see on our results. I need to give you a little background on, there are different parts of the company, different ways the company is actually performing. So we have the contracting business, which is essentially segment one, which is electromechanical projects and package air conditioning. And then you have the cooling products, segment two, and the professional electronics, segment three. They all have behaved differently, if you have noticed. Our problem has been on the contracting side, that is in segment one. Within that, even the packaged air conditioning has done reasonably better. I need to explain the performance in a sort of a layered situation. One is overall, I think you would have noticed that most corporates are facing the heat on inflationary costs, which is hitting margins. Plus, the other one was the continuous increase in interest rates. You know that for almost 10, 12 times the interest rates went up, which means the borrowing costs have been up. The liquidity has also not been helpful. So many corporates have problems with the margins and the cost of money. I think that's across the board. I've seen, in fact, today's Times of India saying that quite clearly. So we also have been affected as we are in this space. As far as our business is concerned, on the contracting side, essentially infrastructure and construction industry both seem to be a little down. I think it's going basically because capex is down. I think it's related to business sentiment and also cost of money, and so one is seeing a slight downturn there. I won't say slight, actually continuously going down every quarter. And so we are affected because the bookings are down and the cash flow, the progress on projects is slower, right? You come to the other side, our business on room air conditioner, we've been doing very well. We beat the market continuously for the last 3 quarters.
Sure.
We've grown about 25-30%, yeah. So in fact, we invested more there. Advertising cost has gone up.
Mr. Jamdar, please allow me to interrupt out here. Since we are a bit curtailed for time today because of a number of other interviews as well, I just want to come to 2 or 3 key points, really. One is, it's in line with what you had predicted, yes. The question mark really is that for how much further would this pain last?
Yeah, I think you use the right word, this pain. It's something unusual for us. We've been a company showing profits year on year for the last 60 years and more. I would say it's an aberration for me and for many of us in the company. But I would say that maybe we have another quarter that we'll have to contend with, and I think that should be the end of the tunnel. We see daylight at the end of that, and I think hopefully back to profitable ways next year, barring some unforeseen circumstance like the euro crash or something. Otherwise, I feel we are on course to get back to profit next year. That's my way of looking at how the company is moving.
Right. Mr. Jamdar, also if you could just give us a sense of how the debt picture is right now. When we last spoke, you said by the end of the year, you were targeting to bring down the debt number, the total debt number to about 400 odd crores. And this time, if you look at the financial cost for the
thank
December...
you for remembering, yes.
the December quarter, when we looked at the financial losses, they've climbed almost 148%. What's going to happen going ahead? What's the repayment schedule looking like?
Well, that's one very positive signal which indicates that we are on the mend. A lot of activities have happened since the first quarter and we started showing poorer results. First quarter was a profit, but was much lower than the first quarter of last year. And then second and third quarter haven't been good. I did mention last time that our borrowing that shot up to almost 600 crores plus, which was unusual for us with the debt equity crossing 1.1 after a long time. We've been below 1 for many, many years and many quarters. And so indeed it was our strong sort of push to get the inventories down, get the collections up and ensure that the borrowings come down. And I must tell you that a large change has happened. From that 600 plus crores, we are down to below 450 crores, which means more than 160 crores of a reduction in borrowings. Reflects in the interest costs not sticking to as high as they are in the second quarter. And as we go forward end of the year, I did mention to that I want to come below the figure that we had in April, which was around 400. So we had about 450. Actually, we went down below 450 to about 440 or so. And I'm sure that the way we are pushing now, we'll go below that 400 mark by March. That's I think what will happen.
And we wish you all the best.
That's a very positive sign for us.
And we wish you all the best for that.
Sorry?
I'm saying we wish you all the best for that, the debt levels
you,
as well as the quarter ahead. Hopefully, only one more quarter of pain, Mr. Jamdar.
Yeah, thank you.
We'll of course talk to you at that quarter as well. Thanks so much though for taking the time out. Need to move ahead and take in one more management.